the stock has clearly been acting as if something's changed. That something's dramatically changed, that comps are trending in the right direction for the first time in a while. How would you characterize what's taking place there in the here and now?
Well, I've been around retail quite a long time, and when these turnarounds start to turn and gross margin and comp store sales start to go up, the stocks generally do too. The question is whether they can hold it.
It's not so much that the stock's been going up as the story has turned a bit. Is the worst over? I mean, can we take the doomsday scenario off the table at this point with JCP?
No. The question is, can they get sales at acceptable margins to get them cash flow positive enough that they do not run out of cash when their debt starts coming due in the third quarter of 2015?
Well, and that's what was so interesting, Charles, about that secondary. They were criticized at the time by some. Of course, it helped to drive their shares ultimately below $7. They've now rebounded to something in the mid-9 range. Still, they were trading above 20 earlier this year. So kind of to Rick's point here, what's the difference between a short-term, very profitable play for some people who are playing around in this space versus a real turnaround for this company?
Well, there is no turnaround for this company anytime soon. I think what you're seeing here is really just a post-Ackman rally. When Bill Ackman got out of the company, I think that made a lot of people optimistic, not necessarily because they think this is sustainable, but because in the short term it lifts this huge weight off the company's shoulders.
Why do you mean the stock went down almost every single day after Ackman sold his shares? I don't understand that. I mean, the stock, sure. There was a view in the marketplace as if Ackman may have gotten out at the top.
Well, there is that. There were a couple of heavy hitters that did get into the stock fairly recently. I say recently, the last couple quarters. Soros Management got in. Heyman Capital got in. There's been a few others that have gotten in here. And so that combined with, I think everybody these days is fading Bill Ackman. So these days, that looked like a short-term bullish opportunity there. But looking at the bigger picture, it's an absolute disaster. Okay, same-store sales growth, or same-store sales decline, I should say, are down about 5% the most recent quarter. Well, you're coming off of declines of 30% from the comps. So you're talking about, okay, yes, it's shrinking at a slower rate, but look at what you're comparing it to. So this is absolutely a train to oblivion. It's just a matter of how fast does it get there.
But, Charles, I'm curious because you described this as a long-term short, pardon the oxymoron to some extent. But in other words, if, as you say, it's on the slow train to nowhere, why not take a position in it? Why not put your money where your mouth is at these levels?
I probably will, honestly. I haven't done it yet, but I do think this is a long-term short. The only bullish argument you can make, and I mean the only bullish argument at all, is that the company may be worth more dead than alive. Perhaps, and it looks like Eddie Lampert is doing this at Sears. Buy up the company, just let the retail slowly die, and then sell off the real estate holdings for presumably a large gain there. The problem is JCPenney has already mortgaged their real estate holdings with the loan they got from Goldman Sachs. Goldman Sachs gave them a lifeline there earlier this year, but they took the real estate holdings as collateral. So the one bullish argument that you can make for Penny, that it's just worth more dead than alive, even that is moot. So I think this is an obvious long-term short.